no audio. Normally, I never needed an audio, but क्या रीमा इतना serious मत हो. And why are you advertising Motilal Oswal? CNBC TV 18. Audio check. Is it okay? Guys, audio check. I can come up there.
Roshan, should we speak from here? Okay. Okay.
This one is actually particularly
tight.
वैसे भी नहीं हो रहा है.
स्लिप हो रहा है. ये ले यार. ऊपर गया.
हाँ वो खुला.
This is jammed. They're all jammed.
इसमें कुछ नहीं होगा. छोड़ दो. नेटवर्क शेयरिंग हो रहा है.
Roshan, we're good?
अजू गुना था माइक है क्या? तेरा भी रखना है. शादी किधर?
On the stage, Tech Mahindra's Managing Director and CEO, C.P. Gurnani, Chief Financial Officer, Rohit Anand, and President, BFSI, HLS, and Corporate Development, Vivek Agarwal. Without any delay, over to you, C.P.
Hey, good evening, everybody. Welcome to the earning calls for Tech Mahindra's Q2 results, financial year 23. You know, when I look back over the last decade, technology has changed the world. Many diverse ways. Look at disruptive technologies, startup ecosystems, climate change, sustainability as initiative, and of course, mother of all, the pandemic. The question is, what is our core purpose? How do we align ourselves to the new world norms? At Mahindra Group and Tech Mahindra, we have often shared with you that our core purpose is to drive positive change in the lives of our communities, and it rests on three pillars: rise for an equal world, be future ready, and create value. Having lived a life which is based on these three pillars, I think it is also gratifying that the external world recognizes us. On sustainability, we continue to be ranked as one of the top companies in the world. And it has been ranked by different agencies, and we have been getting recognition not only in sustainability but in ESG, or in diversity, equity, inclusion, and belonging. The second part is when you look at the future, I think the biggest differentiator is the skills, and Tech Mahindra continues to invest for the future through Makers Lab and continue to develop skills which are making us future ready. Value for stakeholders in the community. I know today we are here to discuss the financial results, and I can only tell you is that a company which is built for performance, driven by purpose, will deliver profit, and Tech Mahindra is acknowledging efforts of all 164,000 associates across 90 countries who are helping us deliver performance and profits. Uh, Gratifying for us is that our diversity ratios have increased. We have been acknowledged as amongst the top 10 best companies for women in India for the fourth time. And I'm again grateful to my colleagues and the community at large and your friendship for recognizing this effort. And clearly, uh, you know, this ratification of sustainability awards or diversity awards give us an encouragement to continue to perform better. In terms of business performance, your company has reported a 3% quarter on quarter growth. CME, which is our largest vertical, continues to grow and is delivering beyond the industry standards. They have delivered 3.1% quarter on quarter growth, and the enterprise business has delivered 2.8% quarter on quarter growth. On the year-on-year basis, CME on constant currency has grown 20% and enterprise has grown 14.4%. So very, very happy with the overall quarterly performance. The quarter is also, our focus on operations. If you recall, last quarter there were many questions about salary increase, few headwinds, and whether we will be able to improve on our operating margins. I'm glad to say that the company has improved not only on growth, but has improved on profitability, has improved on our cash flows, has improved on our DSO days. Overall, a very, very robust all-round performance. So, one of the favorite questions from you in the audience has been the large deals. Again, I want to repeat, my large deal pipeline is as robust or better than ever before. This quarter, we signed 716 million TCV large deals. And the good news also is we had invested in a sports tech vertical previous year. We are one of the few companies in the world which has a sports tech vertical. Many of you would remember that we were the industry partners to FIFA World Cup, where we provided not only technology, but we used to proudly say that FIFA World Cup in South Africa and Brazil, we played all 64 matches. We decided to work on the technologies that we had developed during the FIFA World Cups, and now we are partners with many of the cricketing, not only the countries but the local boards also. And the third one, we are now the sports tech is also working with a large company in US. So you can all say is deal pipeline is good, and overall the EBITDA margin is now at 15.1%, PAT margin is at 9.8%, and the best part is the free cash flow of 253 million is a cash conversion ratio of 159%. I think I'm getting too much into numbers. Mr. Rohit Anand, my beloved CFO, my friend here, I think I'd like to request him to get into the numbers. But before that, most of you have read the press announcement. The board has approved an interim dividend of 18 rupees per share. Last year, we had given an interim dividend of 15 rupees. This year, we are doing an interim dividend of 18 rupees. It just showed the confidence. I know again, favorite questions are going to come in. How is the winter going to look like? What will be the headwinds? I can only tell you is that all of us are in the same boat. We are constantly watching both the weather for the winter and the economic indicators for the recession or any slowdown. And the company will continue to be responsible, watchful, and if required, cautious. So I'm going to now request Rohit to take over, please.
Thanks, CP. So, just taking over on what CP mentioned on financials. As he mentioned, we grew 2.9% on a constant currency basis, broad-based between communication vertical as well as enterprise. Also, when you look at geography-wise, all our geographies, US, Europe adjusting for currency, and rest of the world adjusting for currency grew in the range of 2.5 to 3.5%. So it's a broad-based growth by geography as well. From a TCV win perspective, again, we've articulated a range of 700 million to a billion. So we're in that range. Plus, the deal pipeline looks positive as we look forward. In terms of margin expansion, we've executed at an EBIT level 40 basis point improvement on a reported basis. And when you adjust for currency impact at a margin level, it's an operational improvement of 70 basis points. And as we articulated before, all the operating actions on pricing and other levers on improving our utilization and offshoring have yielded results. And these are the ones that are giving us the benefit, offsetting the inflation that we see periodically from a wage inflation standpoint. In terms of free cash flow, as CP mentioned, we returned 159% of free cash flow to PAT. We had a low quarter last time because of certain one-offs that was normalized. So overall, in the first half period, the free cash flow additive is around $320 million, which is again more than 100% of PAT for the first half period. Our DSO days are down by 2 days, showing the operating rigor we have from an operation standpoint. And then coming towards the dividend, we've given a 20% increase from 15 rupees to 18 rupees. So that's kind of the highlights from a financial standpoint. Again, broad-based growth and margin expansion action working. We'll continue those action as we move forward.
Geography mix, do you want to cover?
Yeah. So geographically, as the growth is broad-based, our endeavor we've articulated has been to do more in US and Europe, and that continues. So US over the last 1 year period has increased by 200 basis point in US share of business for us at a total pie. And similarly for Europe, while Europe on a reported basis shows a reduction, that's more due to the currency. If you adjust for that, both Europe and US are increasing at the cost of the rest of the world. So that path will continue to drive and make investments in those geographies.
So I think it's just a quick update on our acquisitions from the last couple of years. We're very focused on the integration activity, bringing together all the capabilities we've acquired over 2020 and 2021. Uh, and pleased to report that the overall integration activities are going pretty well, and they're around the front office integration, back office from a synergy perspective, as well as creating a very robust uh, service offering portfolio with all these new acquired capabilities. A lot of the new acquisitions have contributed extensively to us winning some of the large deals, and that's very heartening and very positive from a company perspective. Um, so that's the focus in the short term. We will continue to look for opportunistic transactions as and when stuff comes by. But right now, the primary focus is on integrating everything we've acquired over the last couple of years.
Thank you, CP, Rohit, and Vivek. We will now open the conference for a short Q&A session. Media friends who join us virtually can post their questions in the chat box. Post the session, we will proceed to the adjacent room for some select one-on-one interactions. We don't have a question. Okay, there's a question. Can you please elaborate a bit on the deal pipeline?
I think most of our focus during the last 2 or 3 years has been on connectivity, uh, read as 5G, customer experience management, uh, which includes our service offerings from BPS, or as well as through an acquisition called Bond. So I would say that a large deal pipeline is, you know, in terms of robustness and in terms of digital transformation, uh, is probably one of the best that I have seen in the last 5 years. And Americas lead the race. CME uh, has a fair amount of large deals. The gratifying part is customer experience management when it is integrated with not only the call centers but business process as a service, and also with the CRM, digital CRM capability, it has become a unique differentiator. So 5G and digital CRM or digital customer experience management uh, leads, America leads, and a pipeline is better than ever before.
Next question is from Shobit Das. How big a role does India represent for Tech Mahindra's worldwide order book?
I don't have the clear data here. India is an important part of the, overall economic movement. Uh, we, as a company, continue to work with corporates and government and public sector, uh, and I would consider India's business as approximately 5% of our total order book. I don't have very exact numbers, but India is clearly an emerging economy, and India does offer huge opportunities. And one of the other attractive parts of India is that most of my global accounts, they also have a huge presence here. So we continue to work with our global accounts. We continue to work with India, big conglomerates, and clearly one of our big customers is Mahindra Group, where we are sitting right now.
Tech Mahindra headcount has gone up significantly. How are we addressing issues like attrition?
I mean, I think again at 164,000, uh, we believe that we need to manage headcount uh, with a view to build the future. So when I say build the futures, it means we need to have the right skills at the right time. And that means internally we need to get a lot more digital and be able to use AI and analytics. So my feeling is focus on future, focus on skill development, uh, and focus on global delivery model. And that is the way we are going to build our future skills, and that is our strategy.
Next question is from Shivani Shinde. Can CP give clarity on Europe demand?
So I think on Europe, I would like to be cautious. And, Shivani, you write more about Europe than I. I don't want to repeat all of that. And the reason I'm being cautious is on two fronts. One is in constant currency for us, reporting means US dollar. And their currency, European currency, hasn't been doing exactly very well against the US dollar. So clearly, in my reporting, while I do a fair amount of expenditure in local currency, but I still have to take into account that my margin management has to be done in dollars. Number two is there are industries where there are signs of stress. For example, I was meeting one of the large appliance manufacturers the other day, and they said last 2 months the sales have not been that great in Europe because people are postponing their appliances refresh. Similarly, retail, whatever are the lead economic indicators, I mean, they are showing that there is a slowdown in spending. And the reasons are well known, and you guys have documented it. Their energy bills are 2x, their inflation is high, and there is uncertainty regarding the gas supply during extreme winters. So I can only say is that as of date, my customers have not slowed down directly, but we are a lag industry. I would like to be rather cautious.
What about BFSI and insurance sector? Do you see an impact on this segment when it comes to deal pipeline?
You want to take this, Agarwal?
I think from a opportunity perspective, both the demand in both banking and insurance, as we see it, remains robust. Uh, I mean, clearly with the rising interest rate environment is good for the banks. So generally, there isn't an impact on demand. Uh, kind of opportunities we are seeing is are more around transformation, where the institution is looking for trying to modernize, to go to the cloud, adopt cloud at scale, as well as look at efficiencies through automation on their core systems. So that represents a very exciting opportunity for the company overall.
Next question is from Ayushman from Financial Express. Please let us know why profit was down on Y-on-Y basis. Also give some color on clients' discretionary spend. Do you see a slowdown?
Yeah, so year-on-year profit is down because of all the cost inflation that we've seen over the last 12 months. As you know, the supply side pressures have been pretty strong in the last 4 to 5 quarters. So that's impacted the margin. And there's also certain conscious investments that we've articulated, we've taken to change long-term nature of the business, like investing in freshers and certain R&D investments which will help future business for us. So I think those are conscious decisions we've taken and we've articulated it before. Those are the main drivers, and we've said last quarter to now that we keep on showing margin improvement, which is what we've delivered this quarter on various actions, including pricing and operational improvements. Second question.
It's on discretionary spend.
Yeah, so discretionary spend, as CP mentioned, we've not yet seen any impact from our client perspective in terms of change of behavior. But as he said, we will lack industry in terms of any impact that we'll see. So right now we're just cautious and monitoring the situation as we move forward in terms of what holds for us. And geographically, Europe is an area which is a little bit more impacted than US. So in US, we continue to see robust demand.
Thank you, and thank you everyone for joining us. We'll now be concluding this conference. Request you to please reach out to me or the team in case you have any further queries. The recording of this conference will also be available on Tech Mahindra's website and our social media channels. Thank you.